You're listening to AI Prism from Seoul Economic Daily.
Korea's financial system is facing the three highs simultaneously: high exchange rate, high interest rates, and high energy prices, and regulators are beginning to act. The three-year government bond auction cleared at 4% for the first time in 42 months. KB and NH raised mortgage rates by 20 basis points, pushing fixed-rate ceilings above 7%. Citigroup flagged a possible Bank of Korea emergency rate meeting, and Shinhan Bank launched a 0.1% loan for basic pension recipients on the same day. It's Tuesday, June 9th. Let's break down what's happening in Korea's financial sector. Korea's 5-year AAA financial bond yield rose from 3.499% at year-end to 4.413% as of June 5th. 91 basis points in 5 months, driven by Middle East conflict risk, rising market rates, and Bank of Korea tightening expectations. The governor stated last month that the rate path is relatively clear and that tightening will manage growth, inflation, exchange rates, and real estate simultaneously. The July Monetary Policy Committee meeting is now widely expected to deliver a 25 basis point hike. The Financial Services Commission introduced new mortgage restrictions effective June 9th for properties above 1.5 billion won, approximately $965,000. Here's what the numbers show. The three-year bond auction cleared at 4.0% on 2.8 trillion won in supply, approximately $1.8 billion, with a bid to cover of 2.66, below both the prior month and the 2025 annual average. The 5-year AAA bond yield at 4.413% is the primary benchmark for fixed-rate mortgages. KB Kookmin's 6-month variable rate moved to 3.82 to 4.32%. NH Nonghyup raised both fixed and variable rates by 20 basis points. Woori Bank's rate jumped 70 basis points to 4.37% after its discount tranche was fully allocated. Citigroup projects 4 hikes of 25 basis points, July, October, January, April, reaching a terminal rate of 3.5%, with a June emergency session as a tail risk. 20 of 36 one-year deposit products now offer above 3%, led by Jeonbuk Bank at 3.7%. Shinhan's basic pension emergency credit line offers 500,000 won, approximately $322, at 0.1% for 3 years, capped at 100,000 accounts. So what does this mean for Korea's financial sector? Earlier, we noted the 3-year yield breaking 4% for the first time since 2022. Here's what that actually means. The benchmark cascades into bank bond pricing, then into mortgage and corporate loan rates, raising the cost of credit for every household and company drawing on Korean bank capital simultaneously. Citigroup's emergency session scenario, low probability but explicitly flagged, would force immediate repricing across the entire Korean fixed income curve, as the only precedent since 2020 was a pandemic-era emergency cut in the opposite direction. For foreign financial institutions in Korea, monitoring whether the FSS follows the FSC's June 9th action with a formal household debt growth cap in Q3 is the key compliance watch item. Watch 3 things. First, the Bank of Korea July meeting. Consensus is a 25 basis point hike. June emergency session is a tail risk. Second, U.S. May CPI on June 10th determines further won pressure and Bank of Korea timeline. Third, FSSQ3 household debt report. First read on whether June 9th restrictions are slowing credit growth. That's today's AI Prism, Finance Daily. This episode was produced with AI assistance based on Seoul Economic Daily reporting and reviewed by a human editor. AI Prism is a Juan Ifrah award-winning series. We'll be back tomorrow.
You've been listening to AI Prism from Seoul Economic Daily.